Good morning. We will pay attention to accrued income today. It sometimes happens that the income for a specific period was not received in a time so that it could be recorded in the books of the business. Income that is sometimes accrued at the end of the year is, for example, rent income that the people didn't pay it in time, or interest income that was not received in time from the bank. Although this money was not received before the last day of the financial year, it is still part of the income for the current accounting period, and therefore it must be taken into account in this specific accounting period. So entry must be completed for this income so that the total income for the year, whether you received it or not, must be transferred to the profit and loss account. The outstanding amount that is still due at the end of the year is accrued income, and you will create a current asset that will be shown in the balance sheet for accrued income, while the income account must indicate the full amount after the adjustment so that the correct amount will be transferred to the income statement. The entries for this adjustment would be to debit accrued income, because accrued income is an asset, and this is an indication that the business must still receive money in the future, and the asset increases on the debit side. We will credit rent income to increase the income so that we can show the total income in our profit and loss and income statement, and this rent income will increase the owner's equity. The temporary asset accrued income will be written back on the first day of the next financial year. So what we did originally will now be reversed. So we debited accrued income to close that account at the beginning of the next financial year. We will have to credit accrued income. Rent income was credited so that we could have the total amount for the year. Because it was still not received, the rent income account will now be debited. The following information was obtained from the books of Leroy traders. A fixed deposit of 20,000, so that is the amount that is in your fixed deposit account, was invested on the 1st of September 2015 for 5 years at 8% per annum. For the year ended 28 February 2016, 600 Rand has already been received. We don't know if this 600 is the full amount that we are supposed to get, so therefore we must do a calculation to determine what the income for the year should be. The investment was on the 1st of September, so the interest will be earned from the 1st of September up to the end of the financial year, 28 February, 20,000 Rand. This is only for 6 months at 8%. So the amount that we are supposed to receive is 800 Rand. The interest in the fixed deposit account that will be transferred to the profit and loss will therefore be the total amount, although it was not received in time, and 800 will go to the income statement. In the balance sheet, the 200 Rand that is still outstanding, that must still be received, will be recorded as a current asset of 200 Rand. The amount that will be transferred to the profit and loss account will be 800 Rand, the total amount, although all this money was not received. So profit and loss will be credited to indicate that the total income of the business is 800 Rand, and that will increase the profits of the business. In the interest on fixed deposit account, there was an opening balance of 600 Rand. We calculated that the total amount should be 800, so the amount that must go to the profit and loss must be 800. The difference between the 800 and 600 is 200 Rand. That indicates that there's an accrued income at the end of the year, and we have to add it to the interest on fixed deposit account so that we will be able to transfer the full amount to the profit and loss account. Because we credit the interest on fixed deposit account, we will debit the accrued income account with 200. This 200 in the accrued income account will be recorded in the balance sheet under current assets. The first day of the financial year, we will do a reverse entry to close off this accrued income. So because the entry was done on the debit side, we have to credit the accrued income account so that we can close off this temporary asset, and we will transfer that amount back to the interest on fixed deposit account. So in year 2, we can see immediately that there's still 800 Rand outstanding for interest on fixed deposit. What did we actually do? We took our interest on fixed deposit account and we determined that the amount that we received was 600 Rand. The amount that must go to the profit and loss account is 800 Rand. So we worked out by balancing what is the difference between the two. So we actually created a balance, and that balance we called accrued income. And what do we do in the next financial year? We transfer that balance on the credit side and bring it down on the debit side, the 800. What did we learn? When an income was not received in time at the end of the financial year, an entry must be completed so that the income can be increased to the full amount. And an asset accrued income must be created that will be disclosed as a current asset in the balance sheet. At the beginning of the following year, a reverse entry must be completed.